welcome to NDTV Profit. I'm Monal Sanghvi, and we are discussing the earnings of Biocon with the MD and CEO of Biocon Limited, Mr. Siddharth Mittal. Welcome to the show, sir.
Thank you.
Biocon's revenue was up 34% this quarter. Margins came in at 23.4% and net profits came in at 753 crore, beating street estimates of 153 crore. All in all, a good show on the numbers. With your biosimilars, which makes up for almost 62% of the total revenue, also showed an uptick of 65% year on year. So my first question to you around this, and it would majorly be around the biosimilar segment. There is a 350 crore worth of sale of brands to Eris Life Sciences, which has also been included, which is kind of a one-off. So how would that have an impact on the overall margins of the company and the numbers that have been stated?
So as you said that the numbers are included in our revenues. So this was a one-time gain which is included in segment revenues, the EBITDA and the profits. And if you take this number out, sequentially, there has been an 8% growth in the business, and the margins are in the range of 23-24%. And let me also tell you that while you do see the impact of one-time revenue coming in from sale of brands, we've also had one-time costs which are included in our expenses. And these were associated with the transition that we did for the business that we acquired from Viatris. So there is definitely an impact on expenses because of this one-time expense. And I think going forward, we would see an absolute clean P&L where these one-time revenues and expenses should not be there.
Right, sir. So then what is the kind of margin that we can expect in the quarters to come? Q4 as well as FY25?
See, we typically measure the performance of the business in terms of core EBITDA margins, and what we have said, the business continues to be very healthy, and it's we continue to grow in various markets, and on a go forward basis. And in the past, we have seen a good mid 30s kind of core EBITDA margin, and then we invest roughly 10 to 12% of revenues in R&D, so which leads to a EBITDA margin of roughly 23, 25%, and we can expect these kind of margins to sustain over a longer period of time. And of course, there's a pricing impact in markets, but we definitely think that the volume increase that we will see will offset the impact of the price erosion in our biosimilar products.
So again, I'm going to probe a little bit more on the biosimilar lineup that we have. So there's Aspart that I think apart from, we also were looking at Elia, Bevacizumab. Bevacizumab, today there was a letter from the US FDA which is now talking about a complete pre-approval inspection. So what are the kind of timelines that we are now looking at for the launch of these products? Because these are big product launches that we've been talking about for quite some time now.
So we've got the CRL, which only indicates there's a facility inspection pending. The scientific data has been clear. There are no other pending items. And we have been in discussions with the FDA, and we are hoping that the FDA will come and inspect these facilities at the earliest. We are ready from our side. And once the inspection takes place, then we are quite confident that we'll be able to get the approvals after that.
So if you could help us understand this with some timelines, I mean, what are the kind of discussions that you're having with the US FDA? On one on Aspart, on Elia, which is the vision loss product, Bevacizumab, your cancer thing, that I think needs the Malaysia plant clearance also, right? So by when can we expect that? Then, so on these three, and then I would actually ask on a couple more.
So Aspart was filed from Malaysia. Again, we've responded to the FDA with a plan and with the status update. We have had a discussion with them. Again, we are expecting them to come and inspect the Malaysian facility. Bevacizumab was filed from India. Again, as I mentioned, that they are going to come and inspect the facilities. Unfortunately, we have no control on when they will come and inspect both these facilities. And we are hoping that they will come sooner than later to inspect both our facilities, after which we will get the product approvals. Now, Eylea is a product that has been in-licensed and it's not manufactured within Biocon facilities. And this is something where our partner was first to file. We had got this asset as a part of business acquisition from Viatris. You would have followed that there was a litigation going on regarding this product. And at this stage, it'll be very difficult for me to give a precise timeline of when we'll be able to launch the product, given that the case is still in the courts.
Sure, sir. So, would this mean that for now, with the way the timelines are working and with the way there's uncertainty around when it is, none of these launches would be in FY25?
Well, I cannot say that as I mentioned, that we do expect that FDA will come sooner than later to inspect Malaysian and the Indian facilities. And once they come and they're happy with the compliance, then we do not really see any bottleneck to launch the product. So, I mean, it is likely that these products can also be launched in the US in FY25. Of course, we have these products launched in Europe and many other markets, but of course, US is a large market, and we expect that post the inspection and the GMP certification that we can launch these products in next fiscal.
So also a little bit on your performance in the US, there's pegfilgrastim. What is happening on that front in terms of competition that's coming within the molecule, and Humira, which is your neuro product? How is the market share shaping up for these two?
See, pegfilgrastim, we are at a very healthy 18-19% market share, which is the highest selling biosimilar pegfilgrastim in the US. And of course, there's competition, but despite the competition, we've been able to get the highest market share, and it's been going up steadily. So, it's been a great success story on pegfilgrastim. As far as adalimumab or Humira is concerned, we have seen multiple players who had launched the drug in 2023. The uptake for the entire industry and biosimilars has been slow. We have seen certain contracts being announced by large buyers and PBMs, which will kick in 2024. And I think in the coming quarters, we will see how the overall market moves, and within that, how Biocon Biologics gain market share. There have been a couple of smaller contracts that have been won by Biocon Biologics, and the supplies on these contracts would start in coming months.
Sure, sir. So on the generics business, we've been having a declining revenue growth. So what exactly is going wrong there? Is it just pricing pressures, or is it that we're losing market share? And are we launching, any new product lineup which will help again get back the revenue growth in the US?
So we've had a growth, by the way, in our generic formulations business. The degrowth has been in our API business, where we continue to be impacted by the pricing pressure in the US and various other markets, where we are either facing competition from other API suppliers, and hence our customers, instead of buying from us, in certain cases have purchased the APIs from other companies. And in some cases, our customers have not been able to secure the tender for their formulations, and hence they have not purchased the material from us. Now, we definitely think that this is not something which is long-term. We are working on various measures such as cost reduction, bringing in more operating efficiencies, and which should lead this API business to go back to a growth level. Now, we do have a couple of new formulation launches coming up in the US. Recently, our partner received an approval for another drug, liotharonine, in the US. That drug will be launched. We had received a couple of other approvals in the previous quarters, which are going to be launched during this Q4. And we have other filings which are in final stages of review with the FDA. And once these products are approved, we expect to launch these drugs. So overall, formulations growth will be a good double-digit growth, which we have seen even in this quarter. That was offset by API business reduction, and we definitely think that our API has been our core business segment since decades. It's something where we have a differentiation, especially.
और इसमें व्हाइट पेपर में जितने भी है उसमें मैं एक विषय मानती हूं, एक चरित्र है कांग्रेस पार्टी का बैंकों के खिलवाड़ करने के लिए। चरित्र है that they constantly misuse their powers and play with the banks. नेशनलाइज हमने ही किया बोलते हैं, मगर मैं बोलती हूं 3 उदाहरण। स्टेट बैंक ऑफ इंडिया का 1976 में श्री R.K. तलवार जी होते थे एक चेयरमैन, बहुत बड़ा रिस्पेक्टेड चेयरमैन था बैंक में, ठीक है सर। वो उनके इमरजेंसी के टाइम में, क्योंकि उनके पसंदीदा एक पार्टी को लोन नहीं दिया, उसके कारण उनको सीबीआई के द्वारा इतना सताए। और तलवार एकदम इंटीग्रिटी के साथ क्लीन व्यक्ति था, स्टेट बैंक ऑफ इंडिया के चेयरमैन रहते थे, एकदम क्लीन एंड इंटीग्रिटी में हाई होने वाले इस व्यक्ति को, क्योंकि उनके कोई रिश्तेदार या दोस्त को लोन नहीं दिया, उनको सीबीआई के द्वारा इन्वेस्टिगेशन करके फिर दे वांटेड टू समहाउ रिमूव हिम, हटा भी दिया उनको। क्योंकि नहीं, ये नगरवाला नहीं है, ये एसबीआई का एक R.K. तलवार का स्टोरी है 1976। उससे पहले 1950 का स्टोरी लीजिए, मुंद्रा स्कैम। उसमें हरिदास मुंद्रा जी एक कलकत्ता बेस्ड इंडस्ट्रियलिस्ट थे, उसको उनके कंपनी में LIC के द्वारा लोन, LIC के द्वारा इन्वेस्टमेंट करने के लिए था। आई एम कमिंग मैडम, आई विल कम टू स्पीक ऑन द व्हाइट पेपर, ऑफ कोर्स आई विल डू, ठीक है सर। LIC इन्वेस्टमेंट कमेटी को इन्फ्लुएंस करके तब के 1950 में 1.26 करोड़ शेयर्स, वो डूबने वाले कंपनी में LIC के पैसा 1.26 करोड़ डलवा दिया। उसके कारण जब वो स्कैम बाहर आया, उस समय के फाइनेंस मिनिस्टर को बलि का बकरा बना करके हटा दिया, टी कृष्णमाचारी जी को बलि का बकरा हुआ वो फाइनेंस मिनिस्टर, ठीक है जी। और ये चरित्र हम मन में रखना चाहिए, ये चरित्र कांग्रेस पार्टी का हम मन में रखना चाहिए। फिर मैं बोल रही हूं सर, 2004 से लेकर 14 तक फोन बैंकिंग जो व्हाइट पेपर में बाग है उसमें अंग है, ये बाकी सब नहीं है। व्हाइट पेपर के ऊपर बात करने के लिए रिक्वेस्ट आ रही है, मैं बात कर रही हूं व्हाइट पेपर में। फोन बैंकिंग के ऊपर, फोन घुमाओ लोन पाओ, यही था एडवर्टाइजमेंट यूपीए का। पेपर में नहीं आया, मगर फोन घुमाओ लोन पाओ, वही हुआ उस समय।
Hello and welcome. You're watching Earnings Edge on NDTV Profit, and today the company in focus is HealthCare Global. The company's net profit declined 18% in the third quarter to 3.43 crore year on year. The EBITDA was higher though, around 4%. That was partially offset by reduced leverage due to festival impact. The company's several regions delivered high double-digit revenue growth year on year as well. To discuss more on this, we have Dr. B.S. Ajaikumar, founder and executive chairman of HealthCare Global Enterprises, joining us today. Welcome, sir. Thank you for taking the time out. Sir, I'll first begin with the results. Now, on year-on-year basis, we've seen the results. But if you look at it from a quarter-on-quarter point of view, now we've seen revenue decline, profit massively decline actually to about 68%. Could you take us through about what happened this quarter? And also, there's an impact of floods in Bangalore. If you can tell us a little bit about that as well. Mr. Ajaikumar, I think we've lost him, but if I take you through the quarter-on-quarter results that we were going to talk about. Now, on a quarter-on-quarter basis, the revenue declined 3.5%. On a net profit declined 68%. There's also contraction in the margins from 17.21% in the previous quarter to 16.5% this quarter. And there's also some impact of the floods that was hit. There was a hit in the Bangalore region. Now, according to the company's management presentation, the investor presentation, we are now again joined by Dr. Ajaikumar. Can you hear me?
I can hear you now, sir.
All right. So I was just taking the viewers through the year-on-year and even quarter-on-quarter results. Now, there's some weakness in the margins and the profit. The profit fell, I think, 68% on a quarter-on-quarter basis. If you can tell us what went wrong this quarter, and also there's some impact of floods in the Bangalore region. If you can tell us a little bit about that as well.
The flood actually impact is in the Chennai region, where our cyclotron is, and it is a very profitable venture. So pretty much the cyclotron has shut down, and it is still undergoing repair to be in business by end of this month. So that has made an impact on the revenue as well as the profitability with a high margin. That is one reason the margin came down. The second thing is, as you know, we acquired Indore, and Indore acquisition was also there. The revenue was good, but the margin obviously will come down. So that is another reason for the impact. But other thing to keep in mind is the third quarter is always a little bit lower, and most of the companies expect that. So that has also happened, and some changes in our radiation machine. So a few machines which were supposed to be operational were not operational. But the demand is there, and now in the fourth quarter you will see that we are doing extremely well. So the makeup is going to happen. So we will be certainly, whatever happened, we have taken full cognizance of that, particularly the margin drop. And we attribute the margin drop to a few of the reasons I mentioned, but we should start recovering and the margin growth will happen. As I have said this morning also, people ask me whether we are going to reach 20% margin. And we had originally planned to reach this in the first quarter of the next year, 25. But I think because of Indore and our expansion plan, Nagpur consolidation, and also, as you know, we have announced new centers, new fields in North Bangalore, as well as in Whitefield. These are also going to come live. So because of this, it may be in the third quarter or fourth quarter before we reach the expected 20. Having said that, most important thing is our main centers of excellence, centers which are mature, are already giving us 24% margin. And that will be there and it will improve. Even our center of excellence in Bangalore gives us 30%. So certainly all the centers with our focused approach, I think will move towards that in the very near future.
Right. So there's also this Ahmedabad phase 2 that's expected to start operations in the first quarter of next year, what will be the contribution to the top line from this, and what kind of guidance do you have for FY25 in terms of revenue and margins?
We don't give a guidance, but all I can say is our growth will continue at 10 to 12%. But what about Ahmedabad? Yes. From 100 bed, because we overran the capacity, is one of our best centers after Bangalore. And I think the revenue growth will be significant there, over 25-30% in that particular center once the hospital starts completely operational. Obviously, we have to move the equipment, we have to move everything, which we are in the process. We think in the first quarter, as you said, it will definitely start. And it is one of the centers where the demand is so much, we are going from 100-bed hospital to 200-bed hospital. And this will also become, fully occupational with high occupancy within a few quarters. We expect that to happen. But once this all happens, we will give an update on that.
So in FY25, you are expecting a revenue growth of 25 to 30% if this hospital becomes operational.
Ahmedabad center, it could happen. That is our target, but it all depends on the logistics, how quickly we can move because these are all technology, linear accelerator, PET scans and all. So there may be some delay because of that, but it will be a significant growth. And also, we are growing from 100 to 200 in step-by-step phases.
Right.
But it may not happen in the next year, or it can get pushed to the following year.
Right, and margin is expected to continue to remain below 20% in the next year as well because of the capex plans that you mentioned.
As I said, we expect the next year, fourth quarter, to reach the 20% margin.
Okay.
And I know there has been a delay from what we said. We accept that. But the delay is because of the unexpected acquisition of Indore and complete takeover of this center in Nagpur, and some issues with the delay of the cyclotron in Chennai.
Understood. And so there has been an announcement by the government of how cashless insurance is now going to, the hospitals will kind of implement it for pretty much every kind of insurance. Now, does this have an impact on your operations in any way, especially in terms of working capital requirements?
Yeah. No, I don't think there'll be any issue with the working capital because we are quite well funded. But where the impact will be positive, because if you look at today what is happening in healthcare and particularly related to HCG, there was pre-COVID period. There was significant number of people who were cash paying because they all thought obviously I don't need insurance. But COVID has given them an indication. Look here, everybody is better to cover because there's such a diseases can come. But we have seen an uptick in private insurance payers. And that is good for the industry as a whole, and particularly it is good for the people. And also the limits have increased. It used to be 5 lakhs, 6 lakhs, but today most of the insurance are covering for 10 lakhs. I think it is going to make a big impact on access to good health care and people not suffering. We hear stories, people what happened because of the cost and all. That will become less. Combine this with cash paying people becoming less, with more of the payees coming with insurance and some of the schemes coming from real below poverty line people. Right. I think we are in the ways trying to bridge the gap.
Right. Understood. Thank you so much, Mr. Ajaikumar, for joining us. It was a pleasure having you on the show.
Thanks for having me. Thank you.
Now, we have an exclusive chat with the management of LIC that's coming up after the break. Stay tuned for that.
Hello and welcome to NDTV Profit. You're watching Earnings Edge with NDTV Profit. And my guest today is Siddharth Mohanty, who is the chairman of Life Insurance Corporation of India. Mr. Mohanty, thank you very much for joining us on NDTV Profit. Let me begin with the VNB. At the time of IPO, you had indicated that it will take around 3 years to reach a VNB margin of above 15%. But I think within 1.5 years, you have hit more than 15%. So tell us your strategy there, how your product mix is moving from here.
If you see whatever commitment we made post-listing, we are in line with achieving our commitment, and much more than that we are delivering. And particularly if you see, LIC was traditionally par dominated product was there, and there has been directional change in our approach to business, and we have good product mix. We have introduced good non-par products, which not only gives margin but also takes care of customer, gives competitive return in the market, because when we design anything, focus is always on customer. All others will come next, because customer is the biggest stakeholder for us. So recently, if you see, we have launched one product, Jeevan Utsav, and that has also given good margin during last quarter, Q3. And that product is designed in such a manner that takes care of all the stakeholders. Customers first, then distribution, intermediaries, their compensation, and also shareholder margin. So other products also we have launched recently, Jeevan Dhara 2. Recently we launched ULIP plan, LIC's Index Plus.
Yeah.
So all these products keeping in mind customers' need as well as shareholders' interest. So that balance we have made, and that is yielding result.
Sir, for the 9 months, you had a VNB margin of 16.6%, and if I look at comparative, it's around 14.5, which was there for 9 month period. But what was surprising was in Q3 you hit a VNB margin of 20%. And that was a surprise for the street as well. So, give us a sense of how the trajectory of VNB margins will be. Is this 20% sustainable going forward? Q4 is traditionally a good quarter for insurance companies like you. So, is this sustainable, and what is the sustainable level of VNB margin?
You see, my sense is whatever we have achieved so far, that will definitely going to be sustainable. Reason for that I am telling, because these products which we introduced, those are in last quarter, Q3 only.
Yeah.
And towards last part of Q3, November 29th, we introduced Jeevan Utsav.
Yeah.
So only we got 1 month only for December only. So those products will definitely give good traction during this last quarter, and we are getting good response. So margin will be sustained, not only that, but my sense is it will further improve.
You will be looking at 20% as
it will not be
base level
appropriate to give any specific figure.
But the ultimate aim is there?
Obviously, aim will be most competitive margin in the market.
Because if I look at you and your competitors, which is in the private sector, those in size you cannot compare, but their margins are around 25 to 27%, and that gives them a higher valuation also with respect to the market cap to embedded value valuation multiple, which is there. So, from your point of view, how do you chart out a plan or runway for that particular?
If you observe how many years they took to achieve that margin.
Many years.
For LIC, you see, just 1.5 years, almost 2 years will be reaching in May. So within 2 years, we have delivered this margin. So my sense is next 1 or 2 years will definitely be able to be most competitive in margin space and create more value for all our stakeholders.
If I look at the product mix, non-par has gone up to nearly 14.5%.
Yeah.
Will that be an endeavor of yours to increase it further so that it increases shareholder value as well and helps sustain the VNB margin?
See, at the beginning, when we go for listing, we told non-par share will be at least 15% in AP, and we are almost there.
Yeah.
We have crossed 14%, and if you see recent result also will definitely, and by March it will be much more. It will be much more than 15%. My sense is it will be much more. So definitely that will give a better margin.
Okay. Give me a sense of the digitization that is happening within LIC, because that's something which even the finance minister, when she spoke to us, she said that a lot of work has been done in putting systems, controls, digitization. So how is that now bringing in results for you?
Actually, we have taken a massive project for digital transformation. That project we have named it DIVE. DIV, Digital Innovation and Value Enhancement, and a global level consultancy firm, they are guiding us, and already work has started. Last 3-4 months they have started work, and they have identified the gaps, milestones have been identified. Now vendor engagement and actual work will start, and in regular interval some result will come. Not that after 18 months or 24 months a total result, but every 3 months, 6 months some milestones will be achieved, and that is doing good work.
How will it change the way LIC is functioning in terms of synergies or getting more being more accessible?
You see, through technology, all our services, every process will be taken care by technology, starting from customer acquisition. If you know, we have already one app, Ananda app, which is agent assisted app,
yes,
through which agent can complete a policy without physical contact, without wet signature, customer at his place, agent at his place, in matter of 10 to 12 minutes, and policy can be completed, starting from customer onboarding, KYC, RTGS, NEFT, underwriting, everything. 10 to 12 minutes policy can be completed, but we want to upscale that. Because last year we completed 8,11,000 policy through this app. This year up to December already 7,45,000 already crossed. So that customer acquisition through technology, that will upscale that. Besides all other services, we want customer, LIC office should be at the hands of customer in his app, mobile app, everything. Starting from taking new policy, he need not come to office. That we are going to ensure. Customer need not come to our office. Customer can take policy through the app. Customer will choose through agent or direct. That choice is his. Then all services, claim payment, loan payment, everything to be through that app. So that is our intention. In that direction, we have already started working.
How does it change your distribution model or mix? Basically, currently it's agent more than 95%, and then you have a banker channel which comes in. What is that aim of yours to increase banker further?
You see, agency is our strength. Agency will continue to be our strength, but will empower agent with technology, so that their business also grows. But so far as total share of other channels like digital marketing and alternate channel banker, on those also we are focusing, so that they will have also greater share in total kitty, while agents business will grow.
Sir, if I look at the agency business, a third of them are above 50 years of age. Do you think technology will be able to fill that gap as and when they go out, when they get retired, or they go out of the agency?
You see, if I share one data, actually we made a study, new agents which we recruit. Every year we recruit more than 1 lakh agents. Out of that, you will find, if you age-wise classification if you do, more than 48-49% agents, they are millennials. So we are adding youngsters to our distribution channel. Old agents are there because the agency is one profession where nobody retires. Agents don't retire. As long as they continue, they get gratuity also. They have term insurance, various benefits are there. Many agents are totally full-time agents. So there are senior agents, but new agents are regularly added.
a sense of how you're looking at the economy at this point in time. You have a top-down view of economy, not only just capital markets but also economy, because you have the most penetrated into rural markets. How are you seeing this market? Is demand coming back in rural? Because people have been talking about slowdown in consumption in rural segment, while they're talking about the K curve where premium products have been sold but the lower end products are not getting sold. What is your observation as country's largest insurer?
My sense is the economy is bound to grow because the initiatives taken by government at all level, because there is availability of credit, easily credit is available to most downtrodden person, Jan Dhan Bima Yojana, all those things, accounts. So people have money at their disposal, and there is also consumption demand. Supply side and demand side, if you see, there is a good balance in India. So going forward, next 10 years will be India's year. That is what we see. And it will be a growth story, and I am confident LIC will definitely be taking a significant role in India's growth story. Are
you seeing private sector now getting back into the capex mode because you have the better view of them?
Definitely, when competition comes, everybody has to make their strategy and make investment.
But are you looking, are you seeing that more and more companies are trying to raise money and increase capacity?
As the market grows, there will be need for companies, definitely they will go ahead.
Sir, give me a sense of what is the kind of AUM, equity AUM that you have, and how is it growing for you?
It's a total today LIC's AUM as a whole is 49,66,000 crore plus, almost 50 lakh crore. And if you see our equity portfolio, total market cap of India, we are less than 4%.
Yeah.
Our equity 3 point something is there. And our equity portfolio, because we invest continuously, we also book profit whenever market is there for our customers, for our shareholders. And the size is huge. And total around 20-25% of that total equity investment.
And how much have you invested in this financial year in the equity markets?
Total amount will not be, but as compared to last year, it is up.
I wanted to get a clarification because recently, there was an announcement made by you saying that getting RBI approval to invest into HDFC Bank up to 9.9%. Is it an enabling one, or you plan to increase it to?
It is enabling provision we are keeping, because there are many banks, not only that bank but also other banks also we have approached and we have got permission. So that there is enabling provision, and whenever opportunity comes, we will raise our stake in those banks.
Sir, expense ratio has been almost flat for you, 15.28. Is there a endeavor at your end to reduce that as well?
No, we will definitely. Our objective will be to optimize cost. And my sense is when this technology takes care of everything, cost will definitely be optimized.
And this will take a couple of quarters for the technology to stabilize?
It will take some time. Within 1 or 2 years, you will observe, because now we have made it flat. And further, I think as growth is there in our income, expenses, if it is stable also, ratio will come down.
The reason I was asking this, that you announced interim dividend of 4 rupees this time. Last year it was 3 rupees, but this time interim is 4 rupees. Do you look to give more cash out to the shareholders as you increase, because your net profit growth have been outstanding this quarter, and also the performance has been good this year for you?
Yeah, our objective is to take care of everything. First, we have to maintain our solvency and business plan, future growth rate, all those things we have to take care, but at the same time we will take care of shareholder also, which we have demonstrated in recent interim dividend.
Because solvency is at 193%.
1.93.
1.93
Yeah.
for you.
Yeah.
And as your income and performance grew, it will go up further.
Yes.
So will there be more cash payouts to the shareholders? That's what.
That depends. Our board will take a call, but our approach will be very positive to everything.
Sir, what was interesting to see was your 13th month persistency ratio inching up to 78%.
78%.
How do you see that as a figure, and is there room for you to push? What does it indicate for you?
Our objective will be to further improve. 13th month over last year it has improved very marginally.
Yeah.
So objective is to further improve. And with the technology, because of what we observe lapses on many people, unless we follow up, we have special revival campaign also. In between, at a regular interval, we encourage people to pay back their premium. We give some concession, all those things. So objective is to have more persistency, more than 80% at least. Yeah.
And do you expect that to come in only once the technology platform is ready?
Yeah, that will help to a great extent.
So when is this technology platform be ready for you, so that it shows all the benefits which was?
Already it has started. We have introduced one app very recently. It has not been tested. It will take a couple of days. Already that app for customer acquisition, all servicing, everything, one recently. But this dive project, that will take time. But I think next year it will be in place, next fiscal.
Sir, if I look at Q4, which is traditionally the best quarter for you, how do you see that panning out? Because almost in the second month of the
quarter. I am very positive.
Because last year we had this tax
issue there, so this year will be huge growth will be there.
And that's what is giving you confidence that the VNBs will be.
Because you see, first 2 quarters we had some stress.
Yes.
Q1 and Q2. Q3 and Q4 will be LIC's time.
And how do you ensure that there is sustenance of that growth? Because first 2 quarters, as you mentioned, there was some stress coming in on you. How do you make sure that next financial year you have a consistency?
Obviously, there will be consistency because these product lines, these are introduced to us last November, December and January.
Yeah.
So those will give further growth in next year, 25.
Last year, I think 3 or 4 products that you launched, all were non-par products.
Yeah, non-par products.
Do you expect to continue with fresh launches of non-par?
Some products may come, but at the same time, par product will also be there. Par products are also attractive products are there. So, but non-par product also we are going to launch some new product, and we continuously observe product gaps and what are the demands of the market. So accordingly we design those products.
And how do you look at non-par as percentage of total products? Means it's 14% now.
Now it is 14. We told it will be 15.
Yeah, but you have always exceeded your target.
No, we give whatever commitment we deliver more than that.
Exactly. So is that a conservative thing of 15% which you have already spoken about?
Because 15% when I told it was in the beginning, 22. When just we entered market.
Yeah.
So, because we had nothing, if you observe, from 7.12, we went to 8.89.
That's right.
Then last, I think, 10.76 last quarter.
Yeah.
This December, we are at 14.404. And if you take a present time, I think we must have crossed whatever commitment.
15%.
So if you take last month of this January and now, because we see the trend. So definitely it will be much more than that by March.
Is there a target for you that I need to have at least 20% or 25% non-par?
And that we have our internal target, but we are surpassing that.
Sir, I'm running out of time. My final question to you, sir, on IDBI Bank. I know you have already indicated that whenever the government does divestment, you will be part of it. When do you think that's going to happen? Because I think DIPAM has said that they're going to look at second half of this calendar year for divestment.
I think government will take a decision. DIPAM, they are looking into it. They will take a decision on that.
And
timing and all other things. and the firm will decide.
Mr. Monty, it was a pleasure talking to you today. Thank you for joining us on NDTV Profit.
Thank you.
Welcome, you're watching the Mutual Fund Show on NDTV Profit and I'm Tamanna Inamdar. This show hopes to bring you advice from the industry experts so you can make the right choices on your mutual fund investment journey. Today we're starting the show by talking about CRISIL's mutual fund rankings for the quarter gone by. We are also going to talk about the difference between index funds and ETFs ahead on the show to tell you which was a better choice and of course take a few of your queries. But let's start with part one, where we're focusing on CRISIL's quarterly rankings ending with December 2023. Piyush Gupta is joining me now. He is Director, Funds Research at CRISIL Market Intelligence and Analytics. Piyush, great to have you on NDTV Profit. Great to speak with you on the show. Let's begin by getting an overview of your rankings. Have there been any big changes you've seen in the quarter gone by? I think you're on mute, Piyush. We can't quite hear you. Piyush?
Yeah, hi Tamanna. Can you hear me?
There you are. Yeah. Super. Yeah. Yes. Should I repeat the question? We wanted to know if there was any big changes this quarter.
Yeah, so there are a few changes in the ranking. Of course, when we look at ranking over a period of time, there are a few consistent performers. Depending on the category, we can look at some of the examples where there have been big changes and we can talk about them.
Let's start with flexi caps. Let's start with the flexi cap category. This is one that has been a very popular one in terms of new launches as well from the AMCs. How have they fared overall? What has been the average return and which are the top performers and the bottom performers?
Right. So flexi cap as a category, and before I get into the ranking, a quick overview on the criteria or the parameter that we typically look at when we carry out these rankings. So the ranking comprises of one parameter on performance, historically measured using rolling return. Second, being the volatility, which is measured using standard deviation as a parameter. Then we look at three portfolio-based parameters, which is diversification of portfolio at a sectoral level, company level, and third being the liquidity of the underlying portfolio. So all of these factors are looked together before we arrive at the final rank. And funds who fare well in most of these parameters tend to come on top. And given that we are looking at equity funds here, there is a higher weight which is given to the past performance, and hence they tend to play a major role when it comes to the final ranking. Now, FlexiCap as a category, I think it's one of the largest category within the equity mutual fund space. The inflows have been positive consistently for this particular category. When we look at the ranking of funds within this category, what we have seen is Bank of India FlexiCap, JM FlexiCap, and HDFC FlexiCap are the top ranked funds for the quarter ending December. Bank of India and JM are rank 1 and HDFC FlexiCap is rank 2. The bottom rank funds are Motilal Oswal, UTI FlexiCap, and Axis FlexiCap. These funds are ranked either 5 or 4 in the FlexiCap category.